Today, 24 May 2026, global financial markets are closely monitoring geopolitical tensions in the Middle East, particularly developments surrounding the Strait of Hormuz. Oil importing nations are shedding USD. Debt at a rapid suggesting concerns over potential energy price volatility or financial strain. The latest data shows that 10 emerging markets reduced U.S. debt holdings by $86 billion in March, marking the largest monthly decline since 2011. Additionally, Saudi Arabia's crude exports slumped to a record low per Jody data, reflecting global and regional supply dynamics. Key economic events initial vulnerabilities in the global economy. China's retail sales growth has slowed to the weakest since the COVID pandemic, signaling potential strain on Asian markets. In Europe, foreign demand for U.S. treasuries is becoming increasingly concentrated, with Europe holding 37% of foreign-owned debt. Labor markets remain under pressure, with Fortune warning that the class of 2026 faces the worst job market in decades, exacerbating economic uncertainty globally. Geopolitical developments, geopolitical tensions in the Middle East are significant, with U.S.-Iran relations under close scrutiny. Progress on a potential deal has been reported involving U.S. sanctions relief, unrestricted oil sales for Iran, and commitments from Iran to pause nuclear weapons ambitions. Meanwhile, regional players like Pakistan and Turkey are aiding negotiations, while Iran maintains readiness for a destructive regional response if attacked. The Strait of Hormuz remains a focal point, with reports of naval and commercial vessel disruptions. Major commodities and currency markets are reacting to geopolitical and economic developments. Oil markets are sensitive to news from the Middle East, especially regarding the reopening of the Strait of Hormuz and Saudi Arabia's reduced exports. In the currency space, emerging markets' rapid reduction of U.S. debt reflects caution and a potential shift in reserve management strategies. Gold prices remain stable amid ongoing global uncertainty, often serving as a hedge against geopolitical instability. Corporate and financial developments highlight mounting pressures on businesses and consumers. Employers are scaling back health insurance offerings due to financial strain, signaling a shift in corporate cost management practices. In addition, the housing market faces challenges as mortgage rates climb to a 9-month peak. Meanwhile, the AI industry is disrupting traditional labor markets, particularly reducing entry-level positions, which may have wide-ranging implications for workforce dynamics. Miscellaneous highlights. Miscellaneous global developments include heightened missile attacks on Ukraine's Kyiv region, highlighting persistent conflict in Eastern Europe. Meanwhile, the U.S. continues to strengthen its ties with India.